Hey guys, what's up? It's Gleggio. Today I want to talk about the housing affordability crisis. This is a huge issue, both economically and politically. It's taken center stage in the New York City mayoral race. Generation Z voters are making it their single biggest issue because they believe that they're unable to afford housing in ways that previous generations have. It's also a big difference between how the right and the left is talking about this and how they're ascribing blame to the root cause of this problem. On the left, people are talking about greedy landlords and monopoly pricing that's, artificially driving up prices. And on the right, you have people talking about the government strangling development and keeping the housing supply from going up, which would lower prices. Reality is complex. And the root cause is actually something different than these two things. It has to do with a quirk, a once in a lifetime, or maybe once in a 1,000-year financial markets quirk that I'm going to get into, and I'm going to give an ultra-realist take of the housing affordability crisis, what's really causing it, and some potential ways that policymakers could move forward. But first, I want to give a little bit of background because there is a little bit of data here that we should get into. Right now, in 2025, the average price of an existing home sale is about $410,000. Now, for some reference, that's about $100,000 more than it was 10 years ago in 2015. And if you go back to the market bottom in 2009, 2010, it's almost twice what housing prices were. But the housing market is tricky because people aren't going out and buying, they're not spending cash on houses. It also depends on the financial markets and basically, can they get a mortgage for a home? And then second, what is the price of the debt that they're taking on in order to buy this home? Basically, what is the mortgage interest rate? And the second thing that's happening right now is that mortgage interest rates have spiked. Right now, the average mortgage interest rate for if you were to buy like a $400,000 house is almost 7% in the United States. Now, this is crazy because if you go back just 4 years to the end of 2021, mortgage rates were down below 3%. And this is having a huge impact on housing affordability. Okay, so for one example, suppose you went and purchased a house for, I'm going to keep the numbers simple. So suppose you bought a $500,000 house in 2021. If you had a 3% loan on that house, all right, versus today, you had a 6.5% loan on the exact same $500,000 house. I'm assuming no down payment, just to keep the numbers simple. Today, your mortgage payment would be about $3,200 per month, whereas in 2021, your mortgage payment would be about $2,100 per month. So literally $1,100 difference, more than a 50% increase in the home, not in the home price between 2025 and 2021. It's actually been about the same because there was a huge spike during the COVID years. But the home price in terms of a monthly payment is almost 50% more than it was just 4 years ago. So there's really is a big deal. And the only time that has ever been more expensive